Do you trade stocks or do you invest in stocks? The words are often used interchangeably, but if you're serious about either trading or investing, not understanding the difference could cost you. A precise explanation of that difference coming up. Hey, welcome back. I'm really glad you're here. Thank you for joining me. This may be a small one, but this understanding is yet another step on your path to building your rapidly growing, highly diversified net worth one video at a time. There are actually 4 categories to describe the act of you putting money into an individual stock: investing, trading, speculating, and gambling. In this video, we're diving into those first 2. The biggest difference comes down to your mindset or your intentions whenever you enter a position. Warren Buffett says his ideal time horizon for an investment is forever. That's because he finds companies that he believes will be around a really long time. You would probably have a similar mindset if you decided to start your own company, or maybe if you own your own company right now. But let's go through an example. Picture this in your head. Maybe your grandmother made the most delicious jams and jellies.
I'm developing a line of delicious jams and jellies.
And you want to honor her by creating a family-owned business and sharing her jams with the world. You are willing to invest all of your savings into this business, into your business. You're not expecting to find someone willing to pay you a higher price in the near future to get a quick, rapid return on investment. You're probably in this for the long haul. And then let's say you need more funds to really get this business off the ground. So you solicit your closest friends, your family.
Invest in my business.
Your mother decides to invest in your business. She's not seeking or expecting a surge in share value so that she can profitably trade out of the position. No, when we're talking about an individual company, it's deeper than that. For true investors, they believe in the company's future, in its prospects. So they're comfortable staying along for the often long ride just to be part owner of that company. When you invest, it's either something in which you truly, often passionately believe, or something you think will just, in general, continue to increase in value over the long run. And then, if possible, you'll pull out your investment according to your personal schedule to buy a car, a home, or for retirement. When you trade, on the other hand, you buy into something that you believe, for some specific reason, will increase in value by more than your other investment options. Then you plan to watch it regularly and pull it out for a very specific reason that has nothing to do with you and everything to do with the stock itself. It should be based either on your thesis, your original investment thesis, your trading thesis, being realized, being disproven, or simply changing. Maybe you've identified a mispricing in the stock of a publicly traded company, for example, and you're waiting for the market to recognize and correct this mispricing, to adjust to a fair value. You plan to capitalize on that move from its current to your expected share price. Or perhaps you've identified some catalyst for much more rapid growth than the market's expecting. Some technology or discovery, for example, that you have reason to believe will cause a company's value to increase by more than the market. This can happen for people who are uniquely familiar with the potential behind specific technological innovations or pharmaceuticals, for example. But more than just having this rapid growth thesis, trading decisions are rooted in some hopefully sound fundamental or technical analysis. And it needs to indicate to you that the market has not already accounted for this supposed catalyst. You have a thesis suggesting some sort of favorable price change, and you're positioning yourself to take advantage of that move if and when it happens. Clearly, that's a pretty big difference between investing and trading. A huge difference in mindset and the amount of attention that you have to pay to your particular holding, in the amount of research that you have to do on an ongoing basis. Both can work for you, but one is likely going to work way better for you based on your personality, your temperament, and what you in particular can and want to handle. It's not uncommon that across your entire portfolio, your entire net worth, that you're going to use some combination of these two. That's it. So what about you? Are you more of a Warren Buffett style long-term investor, or do you prefer finding those diamonds in the rough and executing trades? Let me know in the comments. Or are you a speculator or a gambler? Unfortunately, I believe many people, maybe most people, who think they're investing are actually speculating. We'll talk about those in the next video as you continue to learn everything you need to know to build your rapidly growing, highly diversified net worth. If you're new here, consider subscribing and clicking the bell so that you too can satisfy that dream. Like and share this video if you found it helpful, and then don't stop learning. Continue on this path by watching one of these videos to get you yet another step closer to your goal. I'll see you there. Take care.